Hello everyone and welcome to my channel SN Study Station. So today we are going to learn about Indian financial system, overview and components. Okay, this can be a very helpful session, very good session for you. Okay, don't just see these sessions only for your subject so that you can write it in exams, so that you can understand the concepts, but it can be useful in real life also. If you are interested in finance, you must learn these concepts, you must know about all these concepts. Okay, so let's start. Overview of Indian financial system. What is a financial system? Okay, financial management we know. Okay, now what is a financial system? If a person wants to invest his money, if a person has saved money and he wants to invest his money at some place so that after few years he'll get profit, so how he can do that? He can go to bank, he can deposit his money there. That is possible. There are various other things also, but for all these things a system is made that is known as financial system, so that everything will go smoothly. Okay, a financial system is made for that, which helps in transfer of resources from savers to investors, from individuals to businesses. It helps in transfer of resources. Okay, if suppose you are a saver, you want to invest your money in any business, so with the help of financial system, if you know about all these things, about all the components, everything you know about, so you can directly also you can invest money, or with the help of some agent also you can invest money. So all these things runs through a system. Okay, so they serve as an intermediary between the savers and investors. They are the intermediary. It is a medium through which savers can reach to the investors and they can invest money in the businesses. Now there is components. It is divided into two parts: formal financial system and informal financial system. So formal financial system, we'll discuss it in detail. We'll discuss it in detail in the further slides. Informal financial system, it includes like money lenders, indigenous bankers, landlords. Okay, so informal is basically which does not follow any rules or regulations. Earlier these things used to be there. Okay, like money lenders are there. Okay, suppose earlier the people were not that educated. Suppose a person wants to lend money from someone. Okay, so those who are rich, the person can take money from them. So what happens in the previous times, people were not educated, so they don't know. Suppose if they are taking 5,000 rupees, so money lenders know they are not educated, they cannot read and write, so they in the register they have mentioned 10,000. People have taken only 5,000, but in the register it was written as 10,000, and when they will come to return the money, they'll give 5,000, but then money lenders will say, no, you have taken 10,000. Like this frauds used to happen. So this was the informal financial system. Maybe in few areas this system prevails now also, but now most of the people are educated. So they were there earlier times. Money lenders were there, indigenous bankers who can connect a person to the banks, landlords were there. Okay, for your land they'll take money, traders were there. Okay, zamindars. So now let's see the formal financial system. This is the categorization. Formal financial system is categorized into four parts: financial markets, which includes capital and money market. Markets we'll not see in this session. For financial markets, I'll make a separate video. We will discuss capital and money markets there. Okay, where we can trade. Okay, financial system means where we can trade, where we can buy and sell our commodities, where we can exchange our commodities to each other. So there's a market for that, capital and money market. Then institutions are there. What are the institutions which are included in the financial system? We'll see it in detail now itself. And then instruments are there. We'll see these things also. What are the instruments that can be traded and who are the participants of financial system. So let's see. We'll start with institutions, then instruments, and then participants. Markets we'll see in the next session. So let's see the financial institutions. What are the institutions? Financial institutions in India. First one is banking institutions. Bank, we all know, private banks, public banks. Okay, there are various banks. Simply we can deposit our money there, and even if it is savings account also, then we will get 3% or more interest in our deposited money. And anytime we want to take loan for any of our requirement, that we can take through banks. So there can be commercial banks, cooperative banks, regional rural banks, foreign banks are there. Okay, now there is non-banking institutions. Non-banking. Okay, banking, the main function for the banking institution is to deposit money and lend money. Okay, now non-banking means which is not bank, but they carry out some functions of bank, few functions of banks. Like NBFC is there, development banks are there. We'll see it in detail. These non-banking institutions we'll see. Then housing finance companies. Housing finance, by its name you can easily remember it. These companies provide only housing finance, means if you want to take home loan, you can opt for these companies. Any individual or any company also go for these companies who need housing finance or who wants to purchase any property. Insurance companies, insurance we all know, life insurance, health insurance, various the types of insurance are there, and maybe you may have invested in insurance policies also. So they protect us from risk. Okay, suppose health insurance policy, if we have taken, if any health issue will come, if any major health issue will come, so the company will provide money for that. The company will bear out the expenses, and what they will get in benefit, they'll get premium from us. Mutual funds are there. Okay, so mutual fund is basically, if we are investing in mutual fund, that means our money will go to some agent. They will invest in different investment opportunities, not just in one single opportunity. They will invest in diversified sources, diversified opportunities. Okay, like this it can be more beneficial. Okay, suppose they have invested in 10 investment opportunities. Okay, 2 are having losses, 8 are having profits, so obviously it will be our profits. Okay, so if the money is invested in more and more opportunities, that will be anyway beneficial. Then regulatory companies, for controlling everything, for making rules and regulations, for ensuring everything will go smoothly, regulatory companies are there. RBIC, BIRDI, PFRDA, these companies are there. Okay, now the role of commercial banks. If any business wants to take loan, if any business wants to complete his credit requirements, he can go for commercial banks. He can go to them and he can take loans from them. So basically it helps them in risk management, whatever their requirements are, so it can be fulfilled with that. Now NBFC, I told you we'll discuss it in detail. Role of non-banking financial companies. These companies are not banks, but they carry out few of the functions of banks. Like they provide capital to us. Okay, banks also provide loans, so they provide capital loans. If we want to open a business, for that we need capital, so they will help out with us, And then services, these are the main services which they provide: personal loan, vehicle loan, home loan, gold loan, credit card services, microfinance, insurance, even insurance services also they provide. Leasing, hire purchase services, investment banking, asset management, all these services they used to provide us. For example, Muthoot Finance is there. Okay, under NBFC, Muthoot Finance can come, which provide us gold loan. We can give them gold and we can get money in return. Bajaj Finance is there, vehicle loan they provide. So NBFC basically helps in market stability, to stabilize the market, and in risk management also. Whenever we require money, we can take loan from them in any form. They provide various types of loans. Advisory services. Okay, they provide various advisory services also, where we have to invest. Financial advisory services. Now, development banks. Basically, they are for two things. They provide us funding support. Development banks, if we have business, we want to develop it, we want to spread it, we want to do some changes in infrastructure, we want to grow, we can take money. That also requires huge amount, so we can take money from development banks, we can take help of them. Then entrepreneurial development, if we want to open a new business, they can help us to become entrepreneurs also. Now, financial instruments, basically equity. Whoever purchases, suppose if any person purchases shares, that person will become the owner of our company. Equity, ownership. Debt means we have taken loan from any organization, from any individual, so that will be debt. We have to pay them interest. For equity, they will become the owner, so they will be the part of our profits as well as for losses. Derivatives, whose value is derived from any underlying asset. They are the financial contracts whose value is derived from any underlying asset. And mutual funds, we have already seen. Money is invested in diversified opportunities. Now, financial participants, regulators, investors and issuers. These two are the main. Investors and issuers so are the main persons. If investors are not there, then companies will not be able to complete to get their capital requirements, to complete their capital requirements. And issuer also, companies, institutions should be there who will issue shares, debentures and various other things. Okay, then investors will invest in that, and then regulators should be there to ensure everything should go smoothly. So it helps in smooth functioning of our business. If participants are not there, then what we will do with financial institutions, with financial markets, with instruments, what we will do with that if no person is there to trade? Okay, now this is the last slide. Challenges in the Indian financial system. Now, if financial system is there, there will be challenges also. Regulation. There are various laws and regulations, various rules and regulations are there. So it is very difficult to remember each and everything, and to understand also it is difficult. Complexity is there. Technological advancements, if that is there, we have to be aware of that and we have to learn about that technology. So these things are there. Then credit. Okay, now you know that financial institutions are there who can provide us credit in our times of need, but everyone knows that. So if suppose you want to open a business, there are many other people who wanted to open a business or who need credit for different requirements, not just for business. They need credit for completing their different requirements, so they can go for financial institutions. So if everyone will go there, there will be limitations also. So limited access to credit is there, and frauds, so it is very common. Though after all the regulations and everything, regulatory bodies are there to check everything, still few people, few hacking activities, few things are there through which people can do fraud. So these are the challenges. So that's it for today. Thank you and keep watching.